There's so many times traders will ask me, what's your favorite setup? The one I'm getting in, that's the one I like the most. The next trade I'm in, that's the one I love the most. I have lots of them. And I try not to build the case for this is my favorite setups, because as soon as I say that, and when you ask me what my favorite is, I know why you're doing that. It's the same reason why I was wishing I could reach out to Larry Williams and say, which one of these trades would you like doing the most? Me, if you were to ask me that right now, I can tell you what that is. And know that what I'm about to say, don't think that this is the best thing for you. It's not. Not all of you, it isn't. But for me, if I had to only trade one setup and I had to wait for it and it had to be there in the chart or I did nothing, I would be trading the second stage distribution in my market maker sell model or my second stage accumulation in my market maker buy model. And that literally is taught in the core concepts. Like it's there. I'm not going to say exactly that, but it's the second stage distribution of either reaccumulation for longs or redistribution for shorts. So I'm looking for a market that's really designed to go lower. Everything's in my favor, and it's a clear market maker pattern where it's going to go lower, it's going to go higher. And those moves are the quick, sudden runs, real quick. It's always going to be a low resistance liquidity run, which is why I'm saying that would be my, drug of choice. If I'm going to be saying it like that, I'm going to get my high off of that one. And it happens every single week. And it sets up as a one shot, one kill. So it would allow me to do whatever I wanted to do with it. If I want to scalp it and get little pieces of it, or if I want to run the whole thing and get a whole month's worth of income, it can come from that one setup. So it can give me whatever I want from it. It could be the one setup for the week. It could be the one setup for the whole month. It could be a training exercise for me to, while it's running. That's my unicorn. That's my setup. That's the thing that if I had to only do one thing, it's that. But clearly you can see I have other things I can do. And what does that mean? I can do whatever the market's providing me an opportunity. And right now, one market might be choppy. If it's choppy, what does that mean? I got to do something else outside that one. Now, can I trade 5 handles in a choppy S&P market? Yes. But what happens if that choppiness is in dollar and you're a Forex trader? Your mind should jump right to the crosses that are non-dollar because they're going to go crazy. And they had really wide runs and several handles, or I'm sorry, several hundred pips, and some of them moving a lot this week based on that consolidation in dollar. So that's the reason why it's important for you to understand that there are many ways to take setups out of the marketplace, but you also have to have a macro understanding of what causes these markets to have the disparity between them, because you need to have the disparity to have what? Movement. And without movement, we can't profit unless you're writing options, and we're not doing that here. So we need movement. As a intraday speculator, as a short-term trader, we have to have movement. So I'm teaching you to, number one, identify where that movement is going to be in the greatest probability. Is it going up or down? And then waiting time of day. What time of day should it do that? Well, that's the times I tell you to follow the marketplace. What happens on the day of the week that it's most likely to provide that? You're looking for higher medium impact news events, because that's where it's going to be highly manipulated. We're waiting for those opportunities where the market just wonderfully invites the retail trader to step into a snare. That's why we're waiting for those high impact or medium impact news driver days. Not FOMC, not CPI, but anything other, not non-farm payroll either, but any other event, medium or high impact. We love those days. We love those days because we know the retail trader is about to get sacrificed on the altar of trading. That's just the way it is. And the smart ones learn how to lose professionally the rest of their life. They manage losing. That's what consistently profitable trading is. Every profitable student, every profitable trader, every profitable speculator is a professional loser. They know when to take their losses because their winners are going to run. They're going to let them do that. The people that don't survive in this industry are the ones that are trying to be professional winners, and it's the only thing they expect. And by default, they lose, and they end it for themselves. They really lose. They lose their account. They lose the ability to trade and speculate because they lose their mind. I'm hoping that in all this rambling tonight, I'm reaching some of you, because the things I put you through in studying and observing things, I know what you want. You want me to tell you the trades that are moving and get you into it so you can make money because you think that's what you need. And I want you to be able to do this when I'm not here. And the only way that's going to happen is to teach you the proper way of doing it and also put you in the charts for homework. Your homework is every day back testing and looking. Back testing isn't necessarily, my version of back testing is not equivalent to what everybody else talks about. Back testing is a casual view of previously traded price data that you can't participate in. Okay. Mock trading is going back to those moves and market replay, maybe a simulator, something like that. That's mock trading. There's a place for that. But my point of back testing is there validity behind the setups I'm telling you to look for? And where does your eye gravitate to? So you're back testing the repeating phenomenon of a individual PD array. So you go through the process of going through old data and say, okay, I'm going to look for breakers. How many times does a breaker form? On what time frame over the course of the last 16 weeks, last 12 weeks, okay? And you look at how much time it took for that market to deliver to a level that I teach you to look for. So if you're going short, you want to reach into a discount array, old low for sell side or old imbalance below whatever the equivalent would be for the range you're in, vice versa if you're going long. And you're going through and you're writing down a list of how many you see, how much movement there was, how much drawdown there was. And when you're doing that, what are you doing? You're drawing up an affinity for that pattern because you're spending time looking at it. Keep the focus on the things I'm telling you to do, which are boring in the beginning. But I promise you, if you go through the process of looking at old data, and once you find that thing that makes the most sense to you, what thing is that? It might be the fair value gap. It might be the breaker. It might be the optimal trade entry. It might be institutional order flow entry drill. It's whatever pattern that your personality aligns with. And you can make money with that one thing. Think, Bob Ross. He did most of his painting with the big brush, the small fan, and a little detail pen, not pen, but detailed brush. He had lots of brushes, but most of his work was done with those three particular brushes. Go to an art store, there's an arsenal of brushes. I couldn't tell you what the hell those things are for. I'm sure they're specialty for something, but imagine that brush is your PD array. It does a specific thing. You only need one thing to do a specific thing, which is what? Profit. You have to have a multiplier, a reason to get in. What's the catalyst that puts you into a trade? That's all you're looking for in the beginning. But you have to decide what that is. I can't push that on you. Like, I'm not manipulating any of you to do any one particular approach to trading. Notice I haven't done that. And when you go through the core content, guess what it does? It gives you the opportunity to decide where you want to be. You want to be a long-term trader? Do you want to be a swing trader? A short-term trader? You're going to trade a daily range? Or are you going to be a scalper? The decisions are up to you. And you have to bring that to this. You do. There's no tethering to me. Just this year. That's it. Once you get your wings, fly, baby. I want to see how high you can go. I can't wait to see you do it. But you got to do the things I tell you to do. You have to. There's no way to do it other than that. You can't fumble your way through it. And it's going to require you to do work. And that means go through the charts, see things in price action and data that you can't trade. You're not even pushing a button on demo. Nothing like that. Not even trade simulators. You have to go through the process of finding what it is that makes sense to you out of what I'm teaching as a PD array. That's your first step because I already taught you how to find the draw and liquidity, and I'm giving that to you all year long. That will happen by default. You'll learn that because you're being exposed to it. That's the only way you did it. That's what happens. That's why I taught paid mentorships where they had to spend the entire year with me. They will see, they saw, it's documented. Nobody can change it. Nobody can say it didn't happen. It's year after year after year. Now you're seeing it on a minute by minute basis. But that PD array, that multiplier, that entry pattern, that concept of getting in, you need to decide what that is. You need to decide that. Nobody can make that decision for you because I can't make you see a mitigation block. I can't see how I could go into the charts and make you see a breaker if you just can't understand a run on liquidity and a shift in market structure. There's two minimal criteria that have to be there for that to be a breaker. And if you don't understand liquidity or where people put trading stop losses and how they might look at the marketplace as a potential breakout, you won't understand a breaker. You won't understand it. You can see me pointing to it, but it means nothing to you. Why? Because you haven't studied old data enough to say, oh yeah, look what happens there. And you have to look at the chart and question, before this move happened, who was long and who was short? And if they were long or short, where was their stop loss at? And then reverse engineer all the price movements, because that's what I did, folks. And you won't be able to do that unless you've done all the back testing, which is simply just looking at old moves and studying them. You're not trying to trade them. You're just observing how often does it form, how quickly does it move into profit, and how much drawdown would it be? And you're logging that and you're putting down, okay, this market on this date, it did this. It moved this much to profitability. This is how much it had in drawdown. And this is how much time it took to trade. And then you're going to get a running total or an average of how many points or pips, whatever market you're looking at, on average, collectively, cumulatively, you'll see that. And then you'll also see what's your maximum losing trade that you saw in that sample set, and what was your maximum profit trade. Throw both of them out, then average what you have there. And that'll give you a pretty good idea as a baseline if that was going to be your model. This is what you, because you can't say that would have been my best trade. I would have got that. Take that out. And your worst trade, what was potentially your worst trade, you probably would have not had your entire stock taken out because you could be doing partials. So you got to take both those numbers out. Don't even factor them in. I'm not trading to try to save face on live streams. Okay. I'm not doing that. I'm trying to take measured, calculated risks. And if the trade is going to go bad, generally, most times I'm going to see it's probably not going to be there. And I start doing that too. The 3-minute rule of it's got to start talking to me right now and be in my favor, or I'm going to start taking some of the trade off or close it all away. I have tools for all those. And then eventually replacing what was required in maybe 1 or 2 jobs to get your income covered. Now you can get it entirely from your trading. So now you've doubled your income. So the next step is to triple your income and save up $200,000 of your own money, not $200,000 in funded account, $200,000 of your own money, and then have a respectable amount of money for trading in yourself, your own money. And you can hold on to these funded accounts if they're still allowing that to be a thing. But you have to have money in the bank before you consider leaving your job. Just because you made a lot of money in your funded account and you had a 6-figure withdrawal, that's not an invitation to quit, because $100,000 is nothing. Like, that's nothing money. For some of you that find it as a first big windfall victory, it's life-changing for you, but it's not going to last forever. I'm calling shots. I'm calling where the market's going to go. All you have to do is study it and then let the process of being there, observing it, even if it's in hindsight, if you can't be there when I'm doing it live, watch the recordings or add the tweets to your chart afterwards and see it. Your eye will be trained in observing it. And because you're doing it, back test, study, look for the things I'm telling you to look for in lectures, and do that while we're doing this tape reading. That's how we're spending the first 2 months. We already got through pretty much this month so far. Just a little bit more time, and then we'll be into what would be considered month 2. In month 3, you're pushing buttons. Okay, I'm going to put you in the markets. I'm going to tell you, do this right now and start tracking how much time. And you're all going to have different fills. You're all going to break the rules. You're not going to put your stop loss in because you're going to be fearful that you're going to get stopped out. Like, I'm in the room looking at you, and you're afraid, or you're afraid that other people in this community are going to see you do it wrong. And I want you to press into that and be interactive with me. Share that experience publicly when I ask you all to do it. I'm not making money on the tweet replies. Okay. So it's not traffic. I'm not monetized in Twitter. I'm doing it so that way we're seeing and hearing each other just like a text message. Like, if I was your brother, if I was your dad or a relative, I want to send you a message, like I had your phone number or whatever. I'm treating that medium the same way. I'm looking out for you. It's just a lot of you. And every time I'm tweeting to you, it's the equivalent of me texting a family member saying, hey, here's my focus right now. I want you to know about this. So it's not a signal service, but it's like a handshake. I'm grabbing you, pulling your attention to something right then and there, and then you have to engage